All right, all right, all right. It is time for our end of day PulseWave report with yours truly, the Algo Capitalist, aka the Vulcan, coming to you live from PulseWave Trading, home of the world famous PulseWave price trigger reports. So, we had a very interesting day in the markets, to say the least. And I felt compelled to do a live stream this morning, and I had to address a few things that I saw on the horizon. And I had to deal with some things that I had seen recently and didn't have the opportunity to speak on like I wanted to. So now that I have done so, I think it's time to look at where we are now. If you had the opportunity to listen to the live stream earlier today, you heard me say that today's close was going to be of paramount importance. The same thing goes for tomorrow's close as well, because we're going to get that FOMC, the last one for the year, and it's going to set the precedence for everything that is going to be happening. All right. And that's very important because you need to know where you stand. You need to know where things are possibly going to be headed. And so we're going to take a look at that. For those who have been with me for many years now, over a decade's worth of content here on YouTube, you've heard me discuss certain things. And one of the things that I have discussed over the years is that equity prices, for the most part, are better priced than your, cash, forex, and futures markets. Okay, and there's a lot of reasons for that, but just trust me when I say they're better priced. All right, they just are, and so we use that to our advantage. All right, we use that to our advantage to see what's what. And that's what we do. And that's what I like to do. So we're going to do that today. We're going to take a look at some of these closing prices and see where we are and where we could possibly be headed. I think it's an important thing to do. So that's what we're going to do. I think it is still a little unclear, though, how the market's going to respond tomorrow. I have a sneaking suspicion that today's price action is actually going to set the stage for what happens tomorrow. Sort of like a predetermined spectacle. The markets knew that a reaction was needed, so the trading range, the trading stage has been set for the rest of the year. And it should be easy now for the Fed to be able to cause a Santa Claus rally to jump off. They made it a little easier. All right. But like I said, the banking system is in trouble. The global economy is in trouble. So where does that leave us? That's the $1,000,000 question. Where is all this headed? Where is all this going? And there's still some uncertainties and some unknowns that we need to get out of the way, and that will be addressed in tomorrow's FOMC. I think that will give the market the roadmap it needs. I think you'll have your answer as to whether we're going to get that end of year rally or is this time going to be different? Under normal circumstances, we would have it and it would be no problem. But we have seen everything but normal circumstances. What is happening now is not normal. We are so far removed from normal as normal can be. Let me show you a few things. All right. We're going to do something a little bit different today because we have so many charts to go over. I'll do this first set of requests and then that'll be it. All right, so the first chart we'll look at is UPST. All right, and this one here is traded on the NASDAQ. Don't have enough data, so it's not going to meet all the requirements of the system, but we have a bear market and we have a market that is trying to stage a bear market rally and is struggling to do so. You had a rally alert here on the 8th of December. Bottom of the Kumo cloud at $21 is your upside target for this move as the market has switched from a bearish to a now bullish perspective on this security. All right, the next one is ticker KC. Let's see here. All right, King's Cloud or Kingsoft Cloud, however you say that. All right, so oh, I thought I had my screen on, my bad. All right, here we go. All right, this one doesn't have that much data on it either. All right, so on Kingscroft Cloud, we also had a rally alert that we got on December the 8th, and now the market's trying to stage that rally with another rally alert for tomorrow. So this one, I think the initial target on this one is probably going to be around the $5 mark. That's going to be your initial upside target if you can get this bear market rally off the ground and going. That's going to be the first target here. All right, since you missed the first one, let me go back and show you that chart. That was on UPST, Upstart Holdings. And this one is also trying to stage a bear market rally. And this is the one that has not enough data to meet the criteria of the system, but you are trying to start a bear market rally. It started on December the 8th. You got upside production, bottom of the Kumo cloud around $21 to $22 is your initial target on that one. All right, and then you have SMMT. All right, and this one is Summit Therapeutics. And on this one, all right, it's also in the bear market, and it has staged a bear market rally that jumped off on December the 5th. I see we came into a crash alert today, and now the market is flip-flopped to a rally alert, canceling out the crash alert. So this one is really trying to stay elevated here. You got a bullish pointer from December the 8th that's going to be challenged and taken out at some point, but you do need to deal with the gap that was created on December the 6th before really having a sustained rally. All right, so this gap down here needs to be reconciled before you can have a real sustained rally and get a strong close above the $4.50 mark. All right, so that is where you are in that one. And last but not least, you have Rent, which is RENT. All right, and this one is Rent the Runway. And it looks like this was on the NASDAQ as well. And we also have data issues here, not enough data. All right, so you're in a bear market trying to stage a bear market rally. You got up into the Kumo cloud. Your next upside target is at $3.67. And I do see a crash alert for tomorrow's trading. So it looks like the overhead trend line resistance corresponding with the top of the Kumo cloud is going to be acting as a very tight barrier of resistance. All right, let's see here. Let's get on track to the next stuff we need to talk about. Let's see what we got here. Been listening to you since back in Thunderdome days with V, killer stuff. Always respect your analysis, sir. Thank you. Well, thank you, TV. I appreciate that. Much respect. I appreciate the love there. All right, I'm gonna show you guys something. All right, this is going to take you by surprise. I know some of you are going to be really surprised what I have to show you. All right, but there's a method to the madness. So we're gonna look at a couple of charts, and then we're gonna get into the meat and potatoes because you have to see this. I mentioned it in the live stream earlier today. I don't know if you caught it, but I'm going to show it to you. So let's do this first. All right, here is Bitcoin. Bitcoin is now trying to come alive. All right, so we had an upsurge today, and we had a new weekly high. Bottom of the Kumo cloud at 19,000 is the initial upside target on your Bitcoin. All right. Next up is the Ethereum. And Ethereum also had a nice up move today, trying to break out of the trading range from back here. Bottom of the Kumo cloud at 1450 is the initial upside target on the Ethereum. All right, now let's get these out the way, because what I have to show you is very, very interesting. All right, let me show you the dollar real quick. As you can see, it's still under selling pressure. Like I told you, you are in free fall. All right, but it's a stair step, very slow grind, but it is in free fall nonetheless. New weekly low hit today. I told you it is what it is until it changes. If nothing changes, then nothing changes. All right. The next thing I want to show you is how this is looking with the pound sterling. All right. So here's the pound. You saw the weakness in the dollar, right? You saw a new weekly high in the pound today. So this bear market rally is still very much alive in your pound sterling. Okay. So expecting more upside to continue there as you have downside coming into play on your US dollar index. So we saw that, right? That's right there in your face. All right. Next up is crude oil. Crude oil hit $75 a barrel today after we got this rally alert coming into today, and we got upside production. Bottom of the Kumo cloud around the $85 handle is definitely going to be the initial upside target on this oil. But just remember, you are in a bear market. And if this is going to turn into a bear market rally, then this will definitely be your upside initial target. However, if it fails here to even get here, then the next leg down will be quite steep. I don't know if people are prepared for that. They'll probably be in unbelief if they see oil drop that much. But it is a potentially possibility. All right. Here's your euro currency. All right. And it hit a new weekly high today, as expected. The bear market rally here and the pound sterling and the euro currency are very much alive and well. All right. So now let's take a look at, let's see here. Let's look at Chainlink real quick. All right, here's Chainlink. So the market hit a new weekly low yesterday and then came in and did the same thing today, even though it rallied into the close. So the market is trying to figure some stuff out here. It's been consolidated and flip-flopping all around the place. But now you have a rally alert for tonight into tomorrow's trading. 750 is the initial upside target on any rally from this point in link. All right, so that's Chainlink. All right. Now let's take a look at Litecoin. All right, here is your Litecoin. Let's get this chart in here. Okay. Litecoin is still flat lying with the bears very much in control. The bottom of the Kumo cloud is still serving to be a solid barrier of resistance, and the bears are just not letting this market go. All right, so this one is still flat to bearish. So make a note of that. This is UUP, the US dollar index ETF. You can see how it broke down, it gapped down today, hitting a new weekly low. And the bears are just putting a lot of pressure on the US dollar. This is UUP. All right, so you can see that there with your own eyes. All right, here's the bond market. Here's what it's doing to TLT. So this is an interesting one. We had a crash alert on December the 8th. On December the 9th, we got a confirmation of that with another crash alert. Then yesterday, we have another crash alert. Today, the market didn't give us any downside production, but rallied and then crashed into the close. And now we're bearish going into tomorrow. Bears are still in control of this bond market. You have temporarily topped out in the bear market bond rally. And you do have gappage from November the 10th. November the 10th, remember that date. That's a key date for a lot of markets where a gap up occurred. Bonds gapped up on the open just like the U.S. equity market did. All right, so you see that here. You can't make this stuff up. Keep that November the 10th fresh in your mind. All right. Now, we're going to get into some very interesting things. So I do hope that you are ready, because what I'm going to show you, some people are going to doubt. They're going to say, I don't believe it. So let's start first with gold. Here's gold. Gold rallied today with the stock market hitting a new weekly high. Bear market rally is intact. All right, so you're expecting more upside on gold. Gold is maintaining strength above the 1800 handle. All right, every time it gets up here at this 1800 level, it usually struggles. You've seen sideways consolidation before today's pop, trying to break out of this trading range here. Take note of this. So now the market is looking for more upside going into tomorrow's trading. All right, so that was gold. Now here's silver. Silver has been stronger than gold, as you recall. All right, so silver had a new weekly high today, busting $24 handle and looking for more as we go into tomorrow's trading. So bullish gold, bullish silver ahead of tomorrow's FOMC announcement. All right, make a note of that. Make a note of what I just showed you so you remember what you saw. So when we go back to it, you'll have that frame of reference that we already talked about. It. I already showed it to you so you know what's going on. Now, you can't make this stuff up, all right? You just can't. The markets do what they do, and they don't care if we agree or if we don't like it. The market could care less. It doesn't care about our feelings about it. It's going to move how it moves. It's going to do what it does. That's why you and I have to stay the course and not get shook by the market. All right. You don't want the market to do that to you. All right. These are the charts that I saved for last because we need to get into it. Wait and see what you see here. We're going to start off. I showed you the euro currency and the pound sterling charts. I showed you the bear market rally. I showed you how we're expecting more upside as the dollar is slipping, right? Here's FXE. This is the ETF for the euro currency. All right, so if you want euro currency exposure without trading forex, here's FXE. It's a good way to do it. Now, you had gapping up today on the open, so you're going to have to back and fill. So there may be a pullback here. It doesn't mean that the dollar is getting stronger. As the euro currency pulls back to back and fill this gap, the dollar will have to go up. Because remember, it's an inverse relationship, right? I just had to show this to you. All right, so now you've seen it. All right, you've seen this. All right, that's the euro currency. All right, now this is the equity side of things. Contrast that with the pound sterling ETF. This is FXB. Okay, same thing, new weekly high. But take a look at the gap up on the open. You see the gap. You need to back and fill before we go further. You also have gappage back here on what date? November the 10th. All right, November the 10th. Remember I said keep that date in your mind? All right, well, there you go. Got to do something with November the 10th before you can have a sustained rally. You can't call yourself having a sustained rally without that. All right, I showed you the oil going upside potential to hit 85 handle. Here is the OIH, the crude oil ETF. Notice the rally alert, and then notice how you got the gap up today. All right, you got that upside today. You're going to have to back and fill before you can have a sustained breakout to get up there. Now, on OIH, we're looking at it getting back up to the 320 to 330 level. Easy, okay? As crude oil rises to 85. So keep this in mind as well. You're still not out of the woods. At least you're in a bull market. So the bull market can relock in at any moment and take off. Always remember that. You had this correction here, right? Short-term top is in place. Now the market has a short-term bottom in place and it's ready to rally. Notice how this corresponds with the top of the Kumo cloud serving as a support for this potential rally in oil. All right, so I showed you that. All right, that's the crude oil ETF. Now take a look at the gold ETF GLD. All right, here's the November for this one. All right, and it gapped up too before November the 10th. But on November the 10th, here you go. All right, same thing for gold. November the 10th. You need to back and fill at some point, and you gapped up today, ladies and gentlemen. The rally may not be sustainable yet, folks. It's not sustainable yet until you take care of these gaps and pointers. I'm showing you this for a reason. We're leading up to a climax here. All right, that's GLD. All right, now here's SLV silver. All right, SLV silver. So you gapped up today, right? You see that gap, right? You can't make this stuff up. You indeed gapped up. You also gapped up here too. And SLV, did we not? This is November the 4th. And here is your November the 10th. Now, they made sure that you back and filled on this gap, but you didn't back and fill from the gap from November the 4th. So you have gaps below in SLV silver as you do GLD gold. Please remember, don't forget about these gaps, people. You can't have sustained rallies without them. And that is my point. You can't, no matter how much you may want to, you can't. All right. So here are now we're down to the nitty gritty. The last four charts, I saved these for last because I want to show you something. Because people like to talk about things they don't know. And so we have to make a clear presentation for you what's really going on. If you missed today's live stream that I did this morning, you're going to want to definitely check that out after we finish this video. Because I talk about some things that I give you a roadmap for tomorrow and what you can expect in these markets. All right. Are you ready? Here we go. We're going to start off with the Dow. All right. DIA, the diamonds. That's what we're going to do first. All right. As you can see here, we have crossed from the bear market perspective to a bull market's perspective. You can say that the bear market rally crossed over from bear market rally to bull market beginnings. All right, that's what you would say, right? That's what you see, right? All right, here's what we have that happened today. You are still under selling pressure. The bears are in control of the market irregardless of today's rally. Today's rally bar in the Dow did not create a bullish pointer, not even a bearish pointer. It was just a pumped up market. That's all it did. And it broke you out of this trading range from the trading range bar of December the 6th. That's all it did. What does that mean? It means you're looking to sell the rally. It's just still a seller's market. The bars are still orange. They're not blue, they're orange. Remember I told you today's close is going to be paramount? There it is, folks. We did not issue a buy signal. I told you equity prices are better priced than the futures. Now, on the futures, it's showing you the possibility of a buy signal. But on the equities, no dice. Still a seller's market. I hope you're looking at this. Now, today's bar did set in a new weekly high, but that was it. No buy signal still. That's why tomorrow's market is going to be just as important as today's market. Will tomorrow give us that buy signal? Is it a true rally? The system is telling you that what you saw today was not a true rally. It was artificial. It was a pump. It was a stop run to take out weak shorts. All right, from the crash alerts back here. That's all that was. All right, I hope you saw that. Well, you can say that's just a fluke. That's just the Dow. The Dow, no one pays attention to the Dow anymore. The Dow ain't about nothing. The Dow ain't nobody. All right, well, then let's look at the S&P 500. All right, this is the S&P 500, the benchmark that all the fund managers try to beat. All right, they want to beat it. Here you go. This has not crossed over from a bear market to a bull market. As a matter of fact, you've done nothing but consolidate. Your consolidation bar is from the week of November the 30th. Price action has stayed and remained in this zone, including today. You temporarily spiked run out of it only to drop back into it in the close. We did not close outside of this bar. We closed back inside of the bar, smack dab in the middle of this bar to be exact, even though you put in a new weekly high. The bears are in control. Sell the rallies is in effect for the Dow and now the S&P 500 going into tomorrow. That's why tomorrow's close is also going to be extremely important. All right. The system is saying no dice, no buy signal. Well, that's just the Dow and the S&P. No one cares about those two anymore. Really, it's all about the NASDAQ. Okay, well, then let's take a look at the NASDAQ by way of the QQQ. And as you can see here, same story. Bear market still. Selling pressure. The bears are in control. All you have here is a breaking outside of the zone of the trading range from November the 30th, and then you're closed right back into it, right in the middle of the zone. That's it. New weekly high, but that's it. Not on a close, but on a spike, on an intraday, so it doesn't count. Still have not turned to a bullish perspective. Not even on the longer term trend. Longer term trend is still bearish, and that's it. They were able to manipulate the Dow to change the overall long-term trend from a bearish to a bullish, but the price action is still not there. The price action has diverged from the trend itself. And last but not least, for all the naysayers, here is the Russell My Hustle. The ticker here is IWM. All right, the Russell My Hustle. And here we go. You didn't even put in a new weekly high in today's rally like you did in the other indices. All you did was come back into the consolidation bar here as well. And that bar was right here from November the 30th. And there you go. Price action at the lower end of this range. Bears are still in control of this market, selling rallies. That's all we got going on here, ladies and gentlemen. Tomorrow it's going to have to set the course. All right, it's going to have to set the course. Markets are going to have to bottom out in order to rally, but you can't bottom out if you haven't reconciled all of your gaps. The Russell has, because the gap was back here, November the 10th. It reconciled that this week. So it can make an argument for rally conditions to ensue. But the other indices can't. They can't sustain a long-term rally with unclosed gaps and pointers. You just can't do it, no matter how bad you want to try. All right, folks, I just had to show you this tonight. I had to show you the proof. I mentioned it in today's live. I said you got to stay the course. All right, you got to stay the course until the indicators change, until the system changes from a bearish to a bullish perspective. And that's just what you have to do. All right, so go back and listen to today's video that I did earlier. I put a lot of nuggets of knowledge in there, and I think it's going to be a blessing to a lot of you. You really need to hear it and see what I'm talking about. Now, if tomorrow we get a close that's decent enough to flip from a bearish to a bullish perspective, then fine. We'll get out of shorts and we'll get long the market and ride it until the wheels fall off. And when the market's ready to resume that bear crash, we'll be ready for it. But in the meantime, we got to stick to what the system is saying, and it's saying we got to stay short. So it is what it is, folks. All right, you know what it is. Smash that like button. And remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. And I am out. Peace.